Welcome to Put Paradise. Today I'm going to be walking you through how to execute a put credit spread in the Fidelity desktop application. I know a lot of people use Fidelity. The online tools are a little bit better on your phone with Fidelity. They're definitely better in Robinhood, and Tasty Trade has the best of them all. But I know a lot of people use Fidelity, so we're going to walk through it. So obviously, you log into your account. There's a couple different ways that you can get to the trading screen. I like to just click on quote. In this example, you type in the name of your underlying. We're going to use QQQ. Sometimes you might see the little chain symbol. In this case, you actually can see the view option chain. You click on that. Takes you to the main option chain screen. You want to click on option classes puts. I have mine defaulted to strike prices all, which is good. Click off the expiration dates that you're not concerned about. In this example, we're going to be at October 31st. That's 28 days to go since it's October 3rd right now. All right, so you can see all of your different options. So as you know, if you listen to previous videos, we try to shoot for that 15 to 16 delta. So you look at this column and you scroll down until you find the option that's in your range. So 15.2 delta is at 566. So that's the one that we're going to choose. You want to click on the sell or the ask, doesn't really matter. I typically click on the sell. All right, takes you to this screen. Now, from this screen, what you want to do is click on a spread, since you're executing a put credit spread. Action should be opening. Click on buy to open. The other one will default to sell to open. They put the sell on the bottom, which I don't really like, but it is what it is. You click on your quantity of 1, click on puts. For some reason they make you re-input the expiration, so you go back and you click on October 31st. And you have to remember your price from the previous screen, and it was 566. So the sell is going to be 566, so the buy is going to be 561. Since we use $5 wide. Okay. So now you double check everything. You're selling the higher value, 566. You're buying the 561 as protection. You should be able to get about 45 cents, which you have. You can set the time in force to day or to GTC, good till canceled. For this example, you can just leave it at a day. I typically like to go in at mid-price, depending on how much time that you want to kind of go back and forth with different pricing levels. You might want to start at 44. You might want to start at 45. You might want to start at 46. Just depends on what your feel for the situation is. Again, these bid-ask spreads are very tight. The market is very liquid. You should be able to get around mid-price for this opportunity. So I'm going to go in at mid-price, 45. Make sure it's net credit. Then you click on preview order. Takes the fees out automatically. Preview order. Place order. And that's it. You have executed the put credit spread.